Welcome to TradeTheMBI.com. This is John. This report is for the 23rd of April. We'll get right to the numbers here. We're looking at the NASDAQ and still maintaining pretty good green. We still have just a few sells, nothing out of the ordinary. We had some good continuation off of the positive reading, so that maintained the market and it just kept going along with that. Flipping to the Dow now. It's always an easy one. It's very short. And then for a lot of the high flyers, Netflix did pretty good off that extended move. That gap seemed to work out just fine. Didn't do much for people who didn't have the reading beforehand, but that is part and parcel of why you have to have them in real time. Looking at the ES, here we go. So we had the green above the cyan right here, pretty straightforward. We still have the steel above the cyan now until what we were potentially looking at was, okay, is the steel going to dip below the cyan? That would be a negative viewpoint. Still hasn't done that. Getting closer, that would be our first indication of negative move. Now, what would be interesting is if you get the negative move of steel below the cyan and you continue to move higher, you'd have a little bit of a divergence. Though we can already start to see a little bit of arcing here for the red. If that starts to begin to turn around, we'll make a lower pivot, and that in a couple of days could give us some significant downside action to it. But for now, still progressing to the upside, so we're sticking with that. It will be interesting to see if the cyan will dip below the red, creating an even more bullish trend move. Of course, right now you're going to be starting to hear about all the people with new double tops, even though we've passed the other one before it was going to be, breakdowns, this, that, and the other. It's all a bunch of yakking because they're just making stuff up, looking for patterns that don't exist. NQ, again, all rising there. It's got to get past that cyan, otherwise you're going to retrace quite a bit of this, and that typically ends up what happens if you don't get that crossover into a positive momentum. We did have the higher peaks from the steel, so that consistent with move higher. I'm just going to be watching to see if the steel hangs up here and you maintain the lower cyan, as long as it's not above that zero. No reason why it can't continue. None at all. YM is a little bit more compacted here as we near the 0 point, and that's going to be the key area when we get, what are we, -3 now? So a little bit more on that red, and it's going to be an interesting one, sort of like it was back here as everything looked wonderful as you reach that point, and then all of a sudden the steel broke below, the cyan moved up, and it was a pretty good retrace right here. All that little gobbledygook. This is where you start to get a little bit more concerned, because if the USO was continuing its move across or even up, fine, but we could see that the breakaway for that separation right here on the numbers like to call D omega spread here, where we get the cyan skyrocketing, and it was just a matter of a day or two, and that's usually typical, where you get about 2 days and then boom. Even when we're doing intraday bars, my warns like 2 bars and then you'll get your cascade, and in this case, boom, surprised a bunch of people. But that is troubling for market upside. A little bit of a reversal for GLD, but still making lower lows within that setup. There's no turnaround there, nothing yet. X, likewise, you can see deep red. If we flip the pink bar slightly, still below that line. Can't get into that one from alongside just yet. Likewise, CLF. In fact, I went into deep red on that move and still well below. And this happens with CLF. Some of these other ones, they just stay there for a while. And it becomes protracted. And it was, oh, when's it going to turn? Well, just wait for it. I mean, the earliest move is that pivot up, but as you can see, deep below the red line, you're likely to retrace lows. So, I mean, it's fine for intraday plays, but is it going to give you a consistent move to the upside? No. Oh, JCP, we had looked at that one from that nice upside. And, it's funny, I had some people ask me what the green numbers were. The inverse of what the red numbers do. These white ones right here for projecting the move lower. These are the opposite readings. Moving to that 50K, you can see now it's moved that stop from 56 all the way up to 72. So that's going to lock in. Now you can see that we've got some positive extremes here, but we never got a signal for um, those to be retraced with the steel popping up or anything like that. So um, not bad overall. Market's flat to zero right here at the negative spot. Very close, but remember for that 72.25, the bar will have to close below it. Let's look at the intraday action. There's a big difference compared to what it was on the week before. All right, so we look at the intraday and you can see the difference between an entire day here. I mean, that was eclipsed in the first few minutes. We ended up with a couple of those nice cyan bars projecting higher to the next, and pretty much proceeded. I mean, if we stuck our, well, might as well do it. Put the ABM on there. I typically keep it off when showing you these pictures so that you get a nice clean view of it. But I normally during the day am running it just because you want to have that extra detail. And you can see, as long as it stayed within that range, I mean, it never even got close to touching the white line until we got all the way up here. And by that point, we'd already seen the peak above the 13.5 with the green. That's usually a negative. A little early, you got to end up getting another pop out of it. But not only did it retrace it, but did quite a bit more. And it wasn't that bad of a decline. I mean, pretty nominal. So all in all, it was fairly easy. I mean, you really don't have to do a whole lot. I always tell people you can just follow the color on days like these. It just keeps going. So that was easy enough. Let's take a look at the alert stocks real quick. Okay, we have Apple right here. Very consistent, unfortunately. You're getting into that next day here. You've also got that increased spread. That's not going to be good for continued price improvement on Apple. It could be a day or two off, though. But it's an interesting one. So you get the closing of the gap with Amazon. Once we got the original buy from back over here, we had continued rising. We moved into a new zone. So that suggested continued positivity and still rising. And even though you had decline from prices, still positive look for Amazon. Flipping over to Google. Yeah, that's still a pretty good size spread there that's going to have to be resolved. He did have the nice up pivot, which gave you a slight up day, but that's not terrific. Netflix, we talked about the extended move there. It's finally pulled it back a little bit. But normally what happens with this is maybe you get a day or two across, but it's still overall bullish for it in general. So some people think that maybe they've missed something. This is likely to continue in that same trajectory to the upside. And PCLN, that's still negative. Even though you've had the nice little move, you're about to dip with the steel below the cyan, green's underneath, and you're building a brand new little spread, so that could be a problem for PCLN moving forward. Tesla, nice little buy cross where it started to continue. A little break up above here with the steel. So it stayed across. You get your nice little buy signal with the yellow, and it continued. You're about to get the crossover to a new zone, so that could be very powerful. But the problem is going to be right here. You got to watch that overbought status within it. But overall, looked good. Still is. Twitter, still looks good from that standpoint. Nothing to object to. Just a little bit of a fade off there, and you're kind of flat here. It'd be nice to see the green shoot up, and you get a breakdown of the cyan. But the problem with that is usually you need to be up closer to the 0 point, and it would have been really powerful for Twitter to have had the red break above the 7.5, because if it turns any more right there, then unfortunately you're just going to come back and retrace the whole move. Nothing I can do about it. It is what it is. Baidu. Yeah, that's actually moving a little bit counter to it. I mean, you had the break above, and the rising red is still maintaining it. The nice pivot of the green to continue the move, but you have to watch that if it closes back in again, and you're just likely to retrace the little pop. Nothing too spectacular. FAS, likewise, same thing. You had a nice breakout above here. Traded across a little bit of a pop for it. As long as you still have that steel well above, I mean, I'm not looking at a collapse of any kind as long as that steel is way up that high. I mean, it's going to have to dip below in order for you to change your perceptions. And it's the same thing with the market. So, I mean, that's pretty consistent. And likewise, you can see it from here. This has stayed above in a divergent kind of territory. We've not gotten a crossover. So, fundamentally, it's still somewhat bearish, even though you have this near-term kind of pop with the rising red, and you broke into a new zone, so that should be a little bit of a continuation for Facebook right there. But you're gonna have to see that green get above the cyan, or continue to have the cyan dipping lower, and that will help maintain it. So there you have it, quick and easy, all good. No issues really on the horizon, so we'll just wait and see if anything develops intraday. But overall, not bad. I mean, just kind of coasting. Continue to look for me though on StockTwits private Twitter feed as well. Trade well.